All right, guys. So great to be here with you today. It wouldn't be a COVID broadcast, right, if I wasn't doing it from a spare bedroom here in the house. So thank you guys so much for joining us here today. We're going to be here for just a couple minutes while I wait for a few extra people to roll in for us. But for the early birds that are here, if you want to take a moment while we have some time here before we get started, and just like and subscribe to the YouTube channel. We're also going to be dropping in here into the chat box the links for our Facebook group, so that way you can get all the materials that we're going to be sharing for today's presentation. So today I'm going to be walking you through verbally through the strategies, the COVID financial protection strategies that I've developed here, researching with the most successful investors and financial advisors that I can find in my network. Some of these guys are nine-figure guys, and these are the types of wisdom and pieces that we've been discussing inside of the masterminds. I'm with them, and I'm going to be sharing those with you today. We do have a full slide deck and other video presentations that are about the same topics that I'm going to be talking about here today. We're going to be sharing those inside of our Facebook group, so stay tuned. We're going to be posting the link to that Facebook group there inside of the chat. As we go through it here today. So if you guys don't know me, of course, my name is Scott Royal Smith. I'm the owner of Royal Legal Solutions, which is an online law firm. We have about 20 staff. We help people all over the country with tax strategy, estate planning, asset protection. And we really specialize with entrepreneurs and especially with real estate investors, because real estate investors, what we found, are the most unprotected of anybody. We're going to be talking a little bit about that here today, but I wanted to give you guys a little bit of background about me. Is that I had started in business as in law school. Actually, during my second year, I actually ended up buying a commercial property that was a transmission and auto repair shop, and I rehabbed that building and ended up flipping that building with a partner, and we were the only two to graduate from law school without any debt. And ever since then, I fell in love with real estate and business because I could see, man, this is incredible, the power that you can have doing these things when you do them right and you take proactive measures to do the right thing. So one thing that I found after that was that I loved my career in litigation. I was suing insurance companies because insurance companies regularly, make money by collecting premiums and denying coverage. And the whole time I was actually continuing to invest in real estate. And what I found is I was actually making more money in real estate than I was than being an attorney. So real estate and business became my main focus at that point, once I realized that. And I actually left practicing law for a period of time as I just focused on real estate and building business. And, pretty soon what I found is a lot of the same things that you guys are experiencing right now, issues that that you should have addressed at this point of your life, but you haven't addressed yet. Those are all things that I had to struggle with around, entity structuring and tax and insurance and banking, accounting, all of those pieces, as well as estate planning. And when I ended up going to my local meetup groups, people asked me, "Hey, Scott, what are you doing with all of the real estate? Like, how are all your operations running?" So I'd share with them, here's the things that I had to develop. I'm doing that by, reading all the books and talking to all the experts that were my colleagues at that time. And they said, "Holy smokes, can you put that together for me too?" And I said, "Yeah, absolutely, happy to do that." And that's kind of how I accidentally started a law firm, right? Was by helping people in that kind of way. And that's where Royal Legal Solutions got born. And since then, what it's been a company that's really founded in the principles of saying, how can we help people do all of the best practices and learn how all of the puzzle pieces fit together, so you don't have to do that hard thinking on your own. And that's what we're talking about with the COVID financial protection, is how do all these different types of strategies link together for you guys. So first thing I want to talk to you guys about is why do you need to be thinking about your financial protection? And it's because there's a few main areas. You have to be thinking about, how do you protect your family? How do you protect your wealth? How do you seize opportunities, these opportunities that are going to be coming up because every crisis is going to breed opportunities? And how do you become proactive with getting ready both in terms of the protection as well as to be able to seize the opportunities, because it's the people that are proactive are the ones that are going to win the day. Proactive people win. That's just the nature of the way this world works. So the way that we look at that is, if you want to be proactive, you really have to have a plan. You have to have a plan to be able to answer the question is what if you get sued? What if you're incapacitated and in the hospital? What if you need cash to stay afloat? Or what if you need cash because you're finding amazing deals? How are you going to be able to answer those questions? And those are the things we're going to be talking about here today, and a lot more detail, and talking about like the power of being able to answer those questions, the effect that it's going to have on your life. So you can have some big risk factors from losing in COVID if you're not proactive. And that can be 5 major things that we looked at. One is if you don't have enough cash. If you don't have enough cash, you're not ready to be able to thrive coming out of the outside of COVID. Another one is you have a risk factor from losing is if you don't have your lawsuit protection in place. We know that as economies get worse and if people have less, what they do is they try to go after the people that have stuff, right? And the way they do that is through the use of frivolous lawsuits. We saw this between 2008 and 2009. There was a huge uptick in lawsuits during that time. We're already seeing that come across our desk at Royal Legal Solutions right now. And we're advising everybody to be prepared to fight lawsuits, to be in the best possible position for that. Another risk factor from losing big from COVID is around having no death or hospitalization protection. Right? So if you die or you're hospitalized and you don't have the proper proactive protections in place to protect yourself, you're vulnerable to a lot of bad things happening to your health as well as your finances during that time period. Another risk factor we have is there's people that don't have any access to self-directed retirement funds. So a lot of our clients have self-directed retirement funds because they understand the power of being able to access those retirement funds. One, to make loans to themselves and being able to control that process, as well as to be able to immediately act on new opportunities, investments. So if you don't have access to self-directed retirement funds, you're at risk from losing big from COVID. And the last part here, guys, is that our last risk factor is not understanding how to make good decisions quickly with imperfect information. This is the hardest thing to do, and it's a mindset issue, is that when we have to move quickly, when there's times of panic and crisis, you are going to hear tons of information out there. So there becomes a question in there about how do you sort through good information versus bad information, and how do you prepare your mindset to be able to navigate through these issues long term. So that's how we talk about making good decisions and being able to make those quickly whenever you need to. So I want to share with you guys a key piece here, right? So the really elite investors, what they're doing right now is they're taking proactive steps. They're being very conservative, especially right now. It's a time period where everybody's being very, very conservative. They're sitting on mountains of cash and they're not doing much of anything right now. And the third thing that they're doing is that they're thinking very long term. They're thinking, how do I win this game in 18 months, in 2 years from now? What are the things I need to put in place now to win in that kind of time period? They're not thinking about, hey, should I buy Delta Airlines stock today or tomorrow? That's not the way that elite investors are thinking right now. They're thinking very long term. They're being proactive and they're being very conservative. Great. So a little bit about us, of course. I told you guys that we've been a law firm. We've been in business for over 6 years now. I'm advising people all over the country, primarily with real estate investors. And a great place, if you guys haven't ever had a chance to be able to check us out before, of course, is the Facebook group that's going to be posted here into the chat for you guys to be able to get access into that, to be able to talk to a lot of the people that are part of the community that we support. That's our private Facebook group. That's a community that we monitor with our own staff. We also have a big LinkedIn following with people that have given recommendations for us through our LinkedIn. If that's a place you want to check us out, everybody that's left us a recommendation, I personally reached out to them and said, hey, is it okay if new people reach out to you that are wanting to check us out and see if we're a good fit? And all of them have said, yeah, of course, Scott, I'd be more than happy to do that for you. You might also know us from the articles that we post online. We posted thousands of articles by this point online, a ton of them through biggerpockets.com, where we have a major following there and community there, helping a lot of people from Bigger Pockets from there. So if you want some good places to check us out, those are good places to do that. and be able to see that we have that expertise to be able to help you with that. So let's go ahead and dive in to our mindset number one. This is our very first tactic that we're going to be talking about today in our COVID-19 survival guide. First piece is our mindset number one. It's being better safe than sorry. And if you want access to the link to this presentation, you're going to be able to find that at the link that's right there in the chat. And the reason that it's so important to be better safe than sorry is that if you're in a very new environment. So inside of a new environment, the thing that you have to know about your mindset is what's going to feel right to you is actually wrong, right? Because what's going to feel right to you was the old environment. But you're in a new environment, so you have to be thinking differently now, right? So what you have to do is you have to become aware of when are you going to be making an emotional decision versus a logical decision. We know that our emotional decisions are going to be things that are built from our history and our past. Those are going to be the emotional triggers that are coming up for us. Those are the things that can be intuitive for us a lot of times in there. And inside of a new environment, we have to rely much more on what a logical decision is going to look like. We have to rely much more on a framework for how are we going to make a decision, how are we going to plan for the decisions that we're going to be making. Now, inside of being able to make a logical decision, what you're also going to need to think about is that your data is actually worse than you think it is. You're going to think that your information is good, but it's really not, right? And you need information that's reliable to be able to make informed decisions. And here's a couple of reasons why the information that you have you think is good and it's not. It has to do a lot with the biases that you're going to have. So you're going to think you have good information and it's really not because everybody around you is saying the same thing and thinking the same way, right? That's called a confirmation bias, right? It's because you have it from what everybody else is saying around you. But the thing that we don't typically ask ourselves is, why would those people know? Why would be they the people that I would trust with that? So it's very important to mind that next layer of questioning when you have a lot of people that are confirming for you what that would be. Next piece is that we have a lot of conflicting information right now. Information has never been more abundant than it is right now. But if you ever look back at what types of information that we get, especially from the news, what we get reported to us today often changes next week or 2 weeks from now, right? So it actually takes a while for us to be able to get clarity on the quality of the information that we're getting. So a lot of times what we'll do is we'll get new information in and we'll act immediately on it, right? And that's the wrong way to do it. That's why elite investors are thinking more long-term, because then they buy themselves more time to be able to sort through, is this good information or bad information, right? So the people that are going to lose if they don't heed this type of advice are the people that are greedy. And let me show you what greedy actually looks like in this new context. Because trust me, I'm not against making money, right? I'm all about let's all go out there and make a ton of money, help a bunch of people, and be able to do great at that, right? That's the game of business, right? That's how you keep scores, how many dollars that you're bringing in the business game, right? How many people that you help is an important part of that. Now, the people that are greedy are the ones that are going to be acting too soon. The greedy people aren't doing what the elite investors are doing. Elite investors are staying conservative and they're thinking long term, right? What are greedy people doing? Greedy people are trying to time the market. They're trying to ask the questions about like, hey, do you think this is going to, and this is, I swear, this actually happened to me on all the podcasts that I've been on recently. I'm getting asked questions like, hey, Scott, do you think it's going to be like a U shape or a V shape of the recovery? Or do you think it's going to be a long, slow recovery or a big dip? And when I tell people, I said, this is a bad question. Because what you're telling me right now by even asking me that question is that you believe that you can time the market knowing that, hey, we're at the bottom and I think it's going to skyrocket up next, right? That is not the way elite investors think. Elite investors think very differently. What they do is they wait until there's very high levels of certainty. They wait until they're past the trough. They're on the strong, steady recovery. They're willing to miss the bottom per 10% of the recovery to know that they're on the upswing whenever they get in. And why do they do that? One is because nobody can time the market. Nobody has a crystal ball. You might as well smash that or slap somebody in the face that tells you that they have it because they just don't know, right? The other part of this is that you need to preserve your mental clarity with the investments that you're making. And if you're making investments that you're trying to time and you guess it wrong, you're going to see another whole bottom end of the market fall down. And what's going to be happening with your mind right then? You're going to be worried about, did you make a bad decision? Do you need to be doing something else now? All of these things are going to chisel away at your mental energy and drain you like a vampire. That's going to keep you from being able to have the energy to do the things you really need to be doing, pushing it into your business, to being able to think through problems more clearly, etc., because you got this mental vampire. So whack the vampire by not being greedy, by waiting until you see a solid recovery and then investing your money back into the market. And by then it'll be obvious about what are the assets you should be buying at that point, right? Great. So now we're going to go ahead and jump to mindset number 2. And this is how to beat analysis paralysis, guys. And if you want access to this slide deck and access to our Facebook group, we're going to be pushing this slide deck into, as well as some video content around these topics. You're going to want to get that inside of the chat. We have the links right there in the chat. That's the best place to get access to this collateral. And so mindset number 2, guys, is you're going to beat the analysis paralysis. And how are you going to do this, guys? The main thing that you have to think about when you're beating analysis paralysis is that you're built for an environment that no longer exists, right? You're built for an environment that no longer exists. Our wiring, the way that our brains are made up, are not built for an environment environment that we live in today. We're built for an environment where we're living inside of the jungle, where there's a tiger in the bush, right? And we have to be extremely cautious and worried. We have to act very, very quickly, very impulsively, and a lot of times. So you can know a lot of times that your wiring is actually going to be steering you wrong. Your base instincts are the ones that are going to be steering you wrong, right? So, and the way that this is going to steer you wrong is going to be the levels of fear that you have, right? The levels of fear that you have are the ones that create the paralysis for you to be able to make the right decision. But I got news for you guys. There's nothing to be afraid of right now, right? Because the only things to be afraid of are the things that are actually putting your life in jeopardy. Those are the things that you're actually wired for, is to worry about the tiger that might be in the bush, right? If you guess wrong once, if that's a tiger in the bush or not, you're dead. So you're wired to always run. So you're wired to be much more fearful than you actually need to be, right? So how do we actually overcome this fear and beat the paralysis analysis? Is that we have to create awareness of the fear. And what that first means is first labeling the fear itself and asking yourself, what is it that I'm afraid of right now, right? Then what you have to do is ask yourself, where is this fear? Is this fear in the future or is it in the past? Because it's not in the present. Right? The fear's not in the present because there's nothing that is putting me in jeopardy right now with my life. So the fear that I'm having is either the fear about the future event or the fear about a past event that I'm afraid might occur again. And so it's very important to be able to have awareness of what that fear is and to label it and know exactly what it is. Because once you know it, that fear doesn't have any control over you anymore. The second thing you have to do with the fear is that you have to assess the cost of action or inaction. And so assessing the cost of inaction or action here will tell you about, is this something that's costly for me to make a decision on right now? Now, you might ask yourself, what the heck does that mean if a decision is costly or not? And the way that I define how costly a decision is what's my ability to reverse course if I guess wrong, right? A very costly decision is one that's very difficult for me to reverse if I guess wrong. So maybe I should only be afraid of very costly decisions, ones that are very expensive or very time consuming for me to reverse course off if I'm wrong. And if it's very easy for me to reverse course onto the decision, I'll make the decision immediately. Because why not? I'm going to lose more by inaction than action in that scenario. I might as well go ahead and take action on it. If it's something that's very costly for me to reverse course on, that's where I'll take more time. And I'll give myself more time. Always at least one night's sleep. if I think it's an expensive decision. If I want to make a okay decision, I'll make a decision in the moment. If I want to make a good decision, I'll make the decision after a night's sleep. If I want to make a fantastic decision, I'll make it after 2 nights sleep. There's something that happens by extending the timeline that gives me more clarity inside of the decision making. And that's not just me. This is the elite level people that I've worked with in the investing community. And the way that I know how long I need to give to that decision has everything to do with how costly the decision is, which is how long it takes me to reverse course if I were to guess wrong. Great. So let's go to strategy number 1 here, guys. This is a strategy of how to thrive. We just talked through strategy numbers 1 and the mindset tips number 1 and 2. We have this down in here for the presentations in the Facebook group that are down here in the chat. If you want to get access to more of these materials and some more of this collateral that I'm going over here today. But let's talk about strategy number 1, which is cash is king. Cash is going to be king for your COVID survival. And let me tell you a little bit more, because nobody has the crystal balls. So it doesn't matter whether you think the economy is going to get worse or it's going to get better, right? You need cash, period. Cash on hand is the protection. It is the protection that you need, whether it's a worst case scenario of what's going to happen and the economy is going to tank, or if it's a great scenario and you think the economy is going to bounce back. And let me tell you a little bit about why. It's because if the economy is worse than you think, that means liquidity markets are going to dry up. That means you're not going to have access to banks, because guess what? Banks stop lending and people stop lending when the economy goes bad. We've already seen this happen in every single economic downturn that we've had. We've already started to see it right now with banks. If you talk to mortgage brokers, they're not passing jumbo loans. Credit markets are tightening up right now with credit scores having to be higher and loan amounts going lower, right? So we already see this happening right now. So what do you need? You need cash. You need cash if things are bad, because guess what? You need the money to survive. You also need it if things are good. Why? Because you don't have liquidity markets. You don't have the ability to get financing. So you're going to need cash to be able to move on that next deal, guys. So cash is absolutely king. If you want to read more about that, I have it some more in the ebook that's there posted inside of the chat. Strategy number 2, guys, strategy number 2 is cash is also queen, right? Cash is also queen in the sense that you need to preserve your cash flow, not just your cash on hand. That's cash as being king. You need cash as queen because you need the cash flow. So if you have renters, you have people that owe you payments, you got vendors, you got other types of invoices that are out right now, you need to get on the ball with them as soon as possible with leveraging your relationship to make sure you keep getting paid. It's okay if other people don't get paid. You need to make sure that you get paid, even if they don't have to, right? I've been talking to landlords right now that are telling me that said, hey, even though my renters don't have to pay, because some of the government laws that got passed, right? They're still paying. And I was like, why are you still paying? He's like, well, because I communicated with them. And I was there and I formed that deep relationship with them to show them that I cared about them. I was educating them of why it's important for them to continue to pay me. This is what happens if you don't continue to pay over time. This is the kind of position that you might be in, depending on what the government might do next. And this is why, if you continue to pay me, why everything is going to be great. And then offering discounts, right? Being flexible with the amount of money you can come in, right? What we want to do is to be able to keep our cash coming in, get people used to continue to pay us while they're not paying other people, because that's okay if they don't pay other people, but they need to continue to pay us, because with our cash flows strong and we have that cash is king, we have fat capital stacks that we've been able to accumulate and preserve. Now we're going to be in a great opportunity to be able to really seize on the opportunities that COVID is going to present us here. Okay, guys. So there's a key piece here when you're negotiating with your anybody, whether it's going to be a vendor, whether it's going to be a tenant, whether it's going to be somebody you're doing business with, and you want something, but you don't know what to offer them, right, to be able to get what you want in return. This is my favorite tip. If you only take one thing out of this talk, guys, you're going to want to write this sentence down. Here it is, guys. This is the most powerful thing that I've learned in business. It's under what circumstances would you be willing to ... I mean, I've used this to negotiate with airlines. I've used this to negotiate with anybody. I'll ask them, under what circumstances would you be willing to continue to be making your rental payments? Under what circumstances would you be willing to be able to extend to me a line of credit? Under what circumstances would you be willing to do anything, right, with it? This is such a powerful question, guys, because what it does is it clearly states what it is you're looking for, and then it positions the question to them under what facts would allow you to be able to do this, and then they tell you exactly what it is that you need to do for them to give you what you want out of that circumstance, guys. So use that tool to be able to help your cash flows, since your cash flow is queen in this scenario. All right, guys, let's go ahead and jump to number 3, which is going to be protecting your assets, guys. Protecting your assets has never been more important than it is right now. Lawsuits are going up. Asset protection and the need for asset protection is extremely important because it only works if you take the proactive steps to be able to protect yourself from those lawsuits. As I said before, in down economies, people look to take from those that have. And if you have properties in your personal name or other assets in your personal name, you are the person that they're looking to take from because you're the one that's exposed. You're the easy target for them to come after. And so it's very important that you take at least the basic asset protection pieces. I'm talking about if you even have just one piece of property or you have over $50,000 in cash and stocks and other pieces, you just need at least a basic LLC. If you have more than that, there's more advanced things that you could and should be doing to better protect yourself. That makes sense because you have a bigger portfolio. But at the bare minimum, every single person should have an LLC because without it, you're naked, running out there, and you're a great target for them to come after. So, main thing here, guys, is that if you have properties in your personal name, this is something you can't wait on, because what that means is that when somebody's looking to sue, they can easily search the public records and find out exactly how much money they can get at a minimum for coming after you. And if that's enough money, they are guaranteed to file the lawsuit because it's just a business decision for them. They know that by suing you, what they can do in this country is put your entire life savings at risk, knowing that you're going to pay them out big just to go away. So all you have to do, though, is use that LLC strategy and to be able to protect yourself so that way you're just not as easy to eat as the next guy. Have you ever heard that saying, like you don't have to be faster than the bear that's chasing you out of the woods. You just have to be faster than your friend. It's the same thing in asset protection, right? You don't have to be faster than that frivolous litigation attorney and that person trying to come after you, those desperate people that are trying to, take your money so that way they can afford to pay their own staff and bills, right? I'm happy to donate to them, but I'm not willing to let them take it from me, right? All you have to do is make yourself harder to eat than the next guy next to you, and then that's enough protection, especially for where we're at right now. Strategy number 4, guys, that we're talking about here today is protecting your family. Protecting your family has never been more important. And the way that you're able to protect your family is by creating an estate plan. And this protects you against death, and it also protects you against hospitalization. Both of those things can be catastrophic for your finances. And so you have to protect yourself both against death and hospitalization here. So how are you going to do that? First thing you have to do is worry about death protection, right? If you don't have your death protection in place for your estate plan, what happens is that the government actually makes all the decisions for you. They decide who gets your money, how much they get, and when they get it, right? It also means that everything is put onto the public record for who got what. And so this could actually create a target for whoever actually inherits your assets. So you need the death protection in place. The 2 major things that you need for death protection is going to be your pour over will, right? If you're an RLS client already, you know about the pour over will, and you also probably know about the living trust. So the living trust is the document which dictates everything about who gets what, when do they get it, all of the specifications about what you might want to have happen with your assets so you can control the process. The living trust also keeps it off of the government records for who got what. So all of the anonymity and protections are there in place. Now, might not have everything inside a living trust. You might forget to put something in. That's why we have a pour over will. That's that second document that comes in and says, hey, anything we forgot to put in, let's pour it in and distribute it accordingly. And that's your death protection per your estate plan. Now, the second part of your estate plan is your hospitalization protection. Your hospitalization protection is exceptionally important because if you're in the hospital, who can make the medical decisions for you? what is the medical information that the insurance companies and that the doctors are able to talk to you about, or to who's going to be able to handle that information for you while you're hospitalized and you're not able to. And here's the big kicker, guys. Who is going to be able to handle your financial matters while you're in the hospital? Who's going to be collecting the rents, paying the mortgages, paying the insurance, and handling those important financial decisions while you're laid up? If you don't have the estate planning hospitalization protection measures in place, nobody can handle those for you. You can find that your finances fall off a cliff and that people might not be able to make medical care decisions for you, which means it's just a random doctor in the hospital that's going to be doing that for you. And maybe so nobody's able to even talk to your insurance company on your behalf because you haven't done the proper documentation for it. So let me talk you through real quick what that documentation is. The first document that you want to have is your HIPAA authorization. That allows people to be able to share your medical information, deal with your insurance, the doctors. You're going to need that so that way the people that are making the medical decisions for you can also get all of the medical information at the same time. Second document you need is about your medical decisions. This is your healthcare power of attorney. Your healthcare power of attorney is the document that says who can make the medical decisions for you and what decisions can they make. The last document you need, this is the one that protects your finances while you're hospitalized, and it's absolutely essential. Everybody has to have this document in place, and it's called a durable power of attorney. And a durable power of attorney is limited, guys. It's very limited. Mine is very limited. I don't want somebody to be able to grant anybody the power to just walk into all of my bank accounts and stock accounts and just do whatever they want, right? So what I do is I use a durable power of attorney that is very narrowly tailored. That means it's very specific about what the things are that that person can do to help me with my finances. So I know, hey, I need them to be paying insurance. I need them to be collecting mortgage payments. I need them to be able to make payments for my professionals. And so I have it detailed out. What are the levels of my business? What are the things that I know need to keep operating while I'm in the hospital? And I already have that spelled out in that document. So that way they can't really screw anything up and they can keep everything running for me. And that's all because of the durable power of attorney as part of the estate plan. So the estate plan, guys, it's going to protect your family. It's going to protect your finances. It's going to protect your health. It's absolutely essential that you protect yourself and your family and your finances by using that estate plan. All right, so that was our strategy number 4. We're going to move on to our first tactic, and this is our tax-free funding tactic that we use here, guys. This is one of the best things to do. It's going to be leveraging your retirement account, but doing it in a way that's going to be smart, in a way that you can control. So there's 4 major things that you need to know about when you're talking about leveraging your retirement accounts per our tactic number 1 for our COVID protection plan here, guys. The first thing to know is that per the recent laws, you're actually able to withdraw up to $100,000 from your retirement accounts penalty free. From those accounts, right? So before you weren't able to do that. Now they're going to allow you to make a withdrawal up to $100,000 penalty free. So if you need to tap that retirement account, you're going to be able to do that. Now, something that's even better than tapping the retirement account is strategy number 2. Strategy number 2 is simply taking a loan out of the retirement account. So with strategy number 1, when you take that $100,000, you might have to pay taxes on that money, right? Depending upon how that's structured. So even though you have to pay penalties, you might have to pay taxes. But guess who doesn't have to pay taxes? The people that use strategy number 2, which is just taking a loan out of the retirement account. So if you have a solo 401k, or you take your current retirement funds and roll them into a solo 401k, through that solo 401k, what you're able to do is loan yourself up to $50,000, not pay any taxes and not pay any fees and not pay any penalties at all with it. And you have 5 years to repay that. So you'll be able to repay that money long after this COVID thing is done, but you're going to have that $50,000 tax-free without penalties today to be able to use, and you can control that yourself. So you can actually loan yourself the money directly out of the account. You don't have to deal with any third party to make that happen. Another thing you might decide to do is find friends that also have these retirement accounts, and then loan each other money out of the retirement accounts to each other. So you can loan yourself up to $50,000 out of your own retirement account, but there's actually no restriction on how much you can loan one of your friends, as long as they're not a relative, or how much your friend can loan you out of that. So this might be a great time to be able to develop some financial friends, to be able to engage in these mutual loan types of arrangements as a friendly thing to do. Last thing to do, guys, would be to look at creating what's called a ROBS plan. A ROBS plan, ROBS plan. A ROBS plan is how you can take your retirement funds and roll it into a C corporation. And now that money's in that C corporation, you can make investments with it. You can run a business out of that C corporation using your retirement funds. And then you can also pay yourself wages and pay for your medical expenses out of that C corporation if it has an HRA associated with it. So you can use those retirement plans through your C corporation, use it with the HRA to pay for your medical expenses. You can also draw a wage out of that C corporation to be able to pull some of the money out. Everybody's situation is a little bit different of whether they want to just take the $100,000 withdrawal, whether they want to just take the $50,000 loan, whether they want to look about, hey, can I have a financial friend network to be able to loan money to each other, or do I need to take advantage of this ROBS plan to be able to launch the business, to be able to pay for my medical expenses, and to be able to take wages out of that. So this is where expert guidance comes in about saying, hey, what do you need to do? And then being able to say, well, what exactly is going to be the best strategy for you for start to finish. And if you want to know a little bit more about that, the best place to look at that is going to be in those resources that are inside of the Facebook group. And that link is there inside of the chat. Now, I saw somebody here in the chat, Jeffrey Schmidt says, must we pay interest on tactic number 2 when taking the loan? And the answer to that is yes. You have to pay interest, and it has to be, we recommend a 5% interest rate on that. And you're going to pay that interest back to your own retirement account. So you're paying interest, but you're actually funding it back to your own retirement account, which you can then turn around and re-loan to yourself if you'd like to at that time. Well, guys, drop more questions here in the chat as they would come up. Oh, and I saw Suman here dropped in saying an excellent lawyer, and he's used Royal Legal Solutions. Looks like Suman is a current client. So thank you, Suman, for dropping that in. If there's any other current clients that want to drop in here too, I know everybody would love to hear from you into there. Great, guys. So let's talk about tactic number 2. Tactic number 2 is going to be writing off your medical expenses. And I touched a little bit about that inside of the ROBS plan that has to do with retirement accounts, but you don't have to do it associated necessarily with retirement accounts. So let me tell you a little bit how you do it outside of a retirement account. So let's say that you have a real estate investment business, or you have any other active business that you have, right? Anything that's non-W-2 type income. What you can do is create a C corporation that charges fees to your other organizations and channel money into that C corporation. And then with that C corporation, with having what's called an HRA, you can pay for an unlimited amount of your medical expenses. And why is that so important? Is because the medical expenses right now can be exceedingly high. I mean, it can pay for your premiums. It can pay for anything that's not covered by your current insurance. And that becomes exceptionally powerful for you. So if you create the C corporation, channel income to it by having a charge fees to your other entities, then what you can do is use that money as part of the HRA to pay for your medical expenses when those come up for you, guys. Okay, tactic number 3 is to take back your properties quickly if you see they're going south. So remember we talked about before, it was the importance of keeping your cash flow up, right? Cash flow being queen, having those good relationships there with your tenants. This becomes exceptionally important because when we look at tech number 3, it's taking back your properties quickly. What this means is if you have people that look like they're not going to be able to pay, and they might not ever be able to pay, right? And this could be somebody that you sold a house to for seller financing, or it could be a tenant. It could be the right move to just get that person out of there, right? It is not better to have a tenant who's unemployed with a job that's never coming back versus having an empty building. And it's not better to have somebody living in your house just because somebody is living there, even though they're never going to be able to make those mortgage payments again. You should look to be able to say, how can you take back those properties if you can't keep money coming in, right? And so there's going to be government restrictions on this, and there's laws that are out there about that guide how you're able to do this. But what we're recommending in those scenarios is consider, especially if you have seller finance property, is to do a deed in lieu. To say, instead of having to go through the lengthy foreclosure process, offer people a little, offer people some money, offer them a little bit of incentive, and you're going to know what that needs to be based upon your relationship with them to then have them deed the property back to you so you don't have to go through a formal foreclosure process, or that they'll voluntarily relinquish the property otherwise without you having to exert legal pressure, which you might not be able to have or might not be a good option to use. This is going to become really important because you can use your relationship with them to know how to make a deal work with them, how you can help them with one of their problems so you can get what you want. This is where that question comes in. Under what circumstances would you be willing to ... right? And then you can start to use some of these tactics after they tell you what it is that they're looking for. All right, guys, let's look at tactic number 4 here. And this is where we talked about is like, how can you make 1,000% a return on your investment by amending your past year's tax returns? And this is a very niche strategy, guys. This is going to be something that's going to be really great if you're able to take advantage of it, but it's not going to be for everybody. But it's one of the coolest things that I've seen pop up here, guys. So due to the recent legislation that passed, what happened is they said that you can amend your prior year's returns to apply tax credits or depreciation that you would have now. So you can acquire depreciation or tax credits now, and then you can amend your prior year's returns. And that means you can apply that to your prior year returns and actually get a refund check from IRS because now you have offsets on income that you previously didn't have before. And you have a 3-year look back period for this, guys. So here's what people are doing right now. People right now are buying into syndications with commercial real estate. Now, commercial real estate is taking a bath, right, in terms of what's going to happen. So you have to be very careful about just throwing money at any commercial real estate deal. You want to look at a commercial real estate deal that has high tenant improvements, because what that's going to allow you to do is be able to have more depreciation to pass on to the investors. So that's the type of deal that you're looking for. Second thing that you need is you need to be qualified. You or your wife or your husband need to be qualified as a real estate professional. It means working over 750 hours a year inside of real estate, right? Now, what you can do with that money then, or those tax credits that you're going to get from the depreciation from the commercial real estate, because you can depreciate it all within a very short window of time, 30 years of depreciation, just within a few years. That gives you the tax credits. Now, when you combine that with the real estate professional designation, you can apply that against all of the active income that you generated over the last 3 years. Without the real estate professional designation, you can only apply it against passive income, right? But with the real estate professional designation, you can apply it against the active income. So you can see how these two strategies can work together to have massive tax benefits to you. If that's something you want to learn more about, you're definitely going to want to jump inside of the Facebook group that has the link right there inside of the comments. We're going to be discussing that more in depth there, as well as the COVID ebook. I detail out for you guys a lot more about how that works and how these tax strategies would layer together there. But we're talking big returns, because you're not just getting the return on investment for the real estate that you're investing in, you're also getting a return for the depreciation amount that you're applying to your prior year returns that are going to give you cash back right now. Huge returns in right now. Great, guys. So let's go ahead and talk about what do the next steps forward look as, guys. So I've done this video for you guys today. I created this whole presentation and did this, guys, for you here today, because what I want us to do is start engaging more as a community together to be able to support each other with what are the best ideas that we can think of and that we're seeing inside of the marketplace, because things are moving so quickly. So that's what this Facebook group that's there, the link is right there in the comments. That's the reason to join it, because that's where the conversation is. That's where I'm having the conversation. That's where I'm bringing in experts. That's where I'm introducing new people to our community for us to continue to be able to share with each other the very best ideas, because there's really just too much noise out there, guys. There's way too much noise. And so as a community, a very tight community, the Royal Legal Solutions community is going to be able to support each other and what are the very best ideas. So as you can see, there's been a number of people that have dropped in here and said, like, man, I really loved working with Royal Legal Solutions. And that's because we really take care of our community. We really take care of our people. We're very people-centric. So even though we work nationwide and, you know, we're a team of about 20 people now, but we were very very, very focused on is the quality of the information, the quality of the strategies, making sure that we're not putting out anything that's just fluff and the material that you can get anywhere else. We're talking about the very hard-hitting information, the hard-hitting pieces, strategy and tactics and mindset that we see the very best investors. I'm talking about the 9-figure type investors and net worth people are using, that I can bring and share, and that we're all bringing and sharing to the table there. So if you haven't joined already, guys, what I want you to do is go into the comments, click on the Facebook group. There's no other information that I'm going to be sharing with you guys today about tactics, mindset, or anything else. I'll be here to be able to talk with you guys about if you have any questions for me. If you want to post those into the chat, I'm happy to take on anything for you. Any questions that you would have there. But otherwise, what I want you to do right now is actually just go to the Facebook group. The Facebook group is the very best place to be able to enter into, join that community. Somebody from our team was actually going to be reaching out to you as part of you joining that community to be able to introduce you to the group, be able to ask about what things can the community bring you, what things can you bring to the community. So that way we can have this interdependent community of us helping each other, sharing information, having a really high level of connection to each other, because we're not going to be, 100,000 person community, guys. We're keeping this community into something that's very tight, it's very intimate, and that is just for the very best people and the very best information. And we watch that very closely. So inside of that community is where I want you to go right now. Jump to the link that's there as the Facebook community and group link there. Go ahead and join that. Fill out the information that we have there. Download the ebook. That is our COVID ebook that's posted there. The recording of this is going to be posted there. If you had the kids run into the room, right? Or if you got here a little bit late, or you got distracted and thought and missed a part of it, right? Because your phone rang or something like that. We're going to have all that information posted inside of the Facebook group there, but you're only going to be able to get it through that Facebook group. So I want you to go into that Facebook group because I want to make sure that you have all of those resources and that you have a connection to my staff, and you can get to have a relationship with somebody on my staff. So that way, whenever something comes up for you, you start to remember like, hey, I remember Scott talked about a strategy that I might want to use here. You know exactly who to turn to, who to talk to, what are the resources you need to go to, what's the community that you can ask more questions about. And guys, we monitor this community too. So that way, that it's actually my staff that's going to be there watching what is the types of information there. So you can know the information that's in that community is something that's going to be a high quality. It's going to be something that that you can always rely on to the extent that you can rely on the communications that you have here inside of these online forums. So I just want to say thank you so much for joining me here today. And this has been a huge success. Thank you guys for all of your questions in the comments, guys. I want to be doing more things that are like this. And I want to be engaging more with you inside of that Facebook community. So please join that community right now to get in there and make sure that you're in and you're in right now. So that way you can make sure to get all the materials. Any questions that you have about this video, about any of the other things that we're doing, that's great places to leave that inside of the comments. And I'll be walking through those comments. My staff are going to be walking through the comments too, to make sure you guys have all the best information, because I don't want to see us just survive COVID. And I know that's what it is about COVID survival. I think we can come out of this thing thriving, but it's going to take us all coming together. So if you go to that Facebook community, that is where you're going to see us being able to all come together to be able to thrive at the other end of this. So thank you guys so much. I hope you have a wonderful evening. Have a great night. Thanks, guys.